And welcome to the Asset Preservation Hour. My name is Cynthia DeFazio, and I'm joined today by Stewart Willis, founder of Asset Preservation Tax and Retirement Services. Stewart, how are you today?
Oh, I'm doing awesome. I love the holidays. It's always my favorite time of year.
It is mine as well, and it's so much of a pleasure to see you. And I just want to ask you, how has your holiday season been going so far, Stewart?
Oh my goodness, it's been unbelievable. I've had a great time. You know, I talked about my Thanksgiving dinner at the Whites, and I never mentioned Duncan and his amazing carving skills. Duncan White, thank you so much for your hospitality. He was a little bitter that I mentioned his wife and not him, so thank you, Duncan. You're my hero. But no, listen, you know, I'm able to look at these great times that I spend with friends and family and know truly that I'm really blessed. Our company's done tremendous things, and you know, I'm grateful to you, Cynthia, for being a part of it as well. You know, our company's done tremendously well, and you've been a big part of it. So thank you so much for your contribution as well. So you're awesome.
That means so much to me. I'm getting teary-eyed. I didn't know you were going to say that, but thank you. I mean, we've been, how long now, shooting together? Like, what, a couple of years?
A couple of years now, right?
Oh, my gosh.
And it's done tremendous things for the company. So I appreciate you. I hope you realize that.
Oh, thank you.
You know, and as I show my appreciation, I think, you know, in my gratitude, I just realize that there are people out there that aren't going to have the same blessings that we do, that are having a tough time during the holidays. And I think it's really important to give back and to share back. And you know, over Thanksgiving, we started a drive for St. Mary's Food Bank, and you know, we want to continue that. So what we're doing today is we're going to be matching through the end of January any contribution that our clients or our audience makes to the St. Mary's Food Bank. But what you need to do is if you go to our website at www.apsitaxes.com, or there's a QR code that we'll pull up for you here. If you go there, there's a link to the St. Mary's Food Bank, and what we'd be glad to do is match dollar for dollar up to $20,000. And listen, if we blow through 20 and get to 30, I'm okay with that. Let's do it. But you know, for every dollar you spend, that provides 7 meals for, you know, people that can really use it. And so, you know, please reach out, help as much as you can, and we're doing our part as well. So appreciate if you do yours.
Well, Stewart, I love that, and I know you're so passionate about the St. Mary Food Bank, so thank you so much for bringing that up on today's show again.
No, it's an amazing organization that's done amazing things, so we'd like to spread the success as well.
Oh, well, Stewart, thank you so much. I would love to talk to you a little bit about the current state of the economy. I have to ask you, Stewart, what's going on?
Well, it's, you know, we talk about it all the time. We've talked about volatility. I think right now what's on most people's minds is one word, and that's inflation. I think it's dominating most of our conversations. Had an amazing client that came in today that has been sitting in cash for a while because he didn't want to have any of the volatility of the market. He couldn't handle the ride. But he's realizing that money now sitting on the sidelines is losing 6.25% in terms of its ability to purchase stuff. So, you know, when your purchasing power shrinks, that's as big of a tax as you can, you know, as you can expect. And so for inflation, it's really, really important to make sure that you have a plan to counter that inflation. You know, when we talk about the market, Cynthia, we talk about this volatility, and you know, I've said this, and I'm always waiting to change this opening line when I say, you know, we are at the highest point in market history right now. I'm going to pull up the slide that I pull. We update it every week, but I think it's important to look at. This is the S&P 500. Just remember, we're at all-time highs in the market, you know, plus or minus a couple points. And, you know, I think a lot of people talk and they say, look, we want to wait for this market to come back to where it was before. And if you're waiting for 2 or 3 or 5% to come back, look at this crazy mountain that we're on top of. We're on this incredible peak. Never forget where we are, you know.
Absolutely.
And I think it's really important for people to really, you know, to get that as well. Not only are we at the highest stock market in history, we're at the lowest interest rates in history. We just retested that again. Let me show you the 10-year Treasury slides once again. When you look at this here, I know the numbers are a little small on the screen, but if you take a look at that big, massive mountain peak on the left, that is in the 80s when interest rates were super high. And then for 35 years, interest rates have just fallen. And so right now, where, people historically have always said, hey, I'm going to put my money in bonds to make sure I don't lose any money because that was the safe place, right?
Absolutely.
But if you go and buy a Treasury bond today or a corporate bond, and let's say the Treasury is paying 1.5%, what if next year it's paying 3%? What's it going to do? Does it make sense to buy that kind of long-term investment at the lowest interest rate in history when it's very possible to see huge, value volatility? I don't know. For 1.5%, 2%, it probably isn't worth, that kind of risk.
Yeah, absolutely. Let me ask you a little bit, Stewart, about Build Back Better. What exactly is that?
Yeah, so the final iterations are here to come. I mean, any day now, we should be knowing, what's happening. The issue with Build Back Better is that at least in terms of the way it concerns our clients' investments and taxes and so forth, is, you have to put into perspective where we are, from a tax environment here. We are in the lowest tax environment in history. And let me just tell you this, one of the things that we've been preaching for the last 2 years, and it's a message that has resonated with our entire audience, is Roth conversions, tax planning, doing all of that stuff. And I can tell you the Roth conversion is in big jeopardy right now. And people's reality is determined by which news source they use, right? So if you see news channels that are kind of left-oriented, you see quotes that say, wealthy person's loopholes. If you see it on the right, they just say, Democrats trying to raise taxes on everybody. And, the answer is usually somewhere in between. But this is a really important thing. The Roth is actually under tremendous amounts of jeopardy here. Mm-hmm. So remember, once they start with, backdoor Roths, which is basically allowing people that aren't eligible to contribute to a Roth to immediately convert, from an IRA or 401k to a Roth, they start there. And then they keep moving. They keep taking away benefits and rights. And I just really think that it's important for the audience to know that they have some choices, to know that, their planning tools can't keep being taken away. Yeah. Right? You need to be able to have some freedom to make some decisions here. And listen, I am a Berkeley-educated, moderate Republican, but, didn't vote for Kyrsten Sinema. But you know what? She's done a darn good job here. I have to tell you, she's fought the good fight. Honestly, I think it's really important for our audience to communicate with her office and to let her know that, do not touch our Roth. Do not allow us to have this taken away from ourselves. It's really important to protect it, because just remember, it starts at the backdoor Roth. Then it starts at the regular Roth. Right? Then it keeps going and takes away your Roth 401k, etc. It's a huge benefit for people that want to pay the taxes now. And I'll tell you, I think I've been a big revenue generator for not only the state of Arizona, but also the federal government by getting people to convert to Roth. We've, converted millions and millions of dollars over the last few years here, just in the name of tax planning. We've generated tons of revenue right now, but it's created massive tax planning. I think it's important for people to take that into consideration, speak up, call Kyrsten Sinema and her office, let them know what you think. She's done a darn good job here so far, but let's hope she doesn't support getting rid of your Roth.
Well, Stewart, I know that you have a very special offer to present to the viewers at home today. Let's talk about what that is and then open the phone lines.
Sure. What we're offering today is a complimentary portfolio review. And in that complimentary portfolio review, what we're going to do is take a look at all of the fees and expenses, any tax implications we see, hiding inside that portfolio. But it does take action. You do have to call 833-652-7829. We also have a QR code that'll come up on the screen here. If you look at that QR code, you snapshot that, or you go to our website at www.apsitaxes.com. You can contact us, set up a complimentary portfolio review. We'd be glad to help. All you have to do is take action.
Stewart, thank you so very much. To the viewers at home, the phone number to call is on your screen. That number is 833-652-7829. We know you have a lot of questions about how to plan your perfect retirement. Stewart has the answers for you. We have to take a very short commercial break, but don't go anywhere. I have so much more with Stewart when we return.
What happens oftentimes is we'll run into clients or potential clients that have saved all this money, but they're 75, 80 years old. They've got this big pile of money, but they're not enjoying retirement because they're so worried about running out of money that they never actually get to enjoy their life's work. And so to me, it's really rewarding to be able to create a plan so that these people can have a great time in retirement, knowing that they're not going to run out, that they're going to be fine. You know, I think it brings a smile to their face.
We get a lot of different people at a lot of different stages in their lives. And what we're able to do is, for some folks, it's able to tell them that you're on track. Keep doing what you're doing, and 15 years from now, you'll be retired and enjoying life the way you want it to be. For some people, it's people coming in and they're 3 to 5 years away from retirement, and you're able to tell them that, you know what, 5 years, 3 years, tomorrow, you're ready to go.
We are a complete shop. We handle estate planning, taxes, financial planning. We do a really in-depth cash flow analysis that is way more detailed than you'll see in the market.
Everything all in one spot, with the left hand always knowing what the right hand's doing. Because it's not just about the investments, but how's that going to affect your taxes. It's not where are you going to be 5 years from now, 15 years from now. And it's that back and forth full view of what the clients, not only today, but tomorrow and their legacy down the road is going to be, that really sets us apart.
And welcome back to the Asset Preservation Hour. My name is Cynthia DeFazio, and I'm joined today by Stewart Willis. He is the founder of Asset Preservation Tax and Retirement Services. Stewart, in our first segment, we talked about, obviously, the market being so incredibly healthy and an all-time high, if you will. Do your clients realize how high the market is right now?
Well, I think sometimes, Cynthia, people, can't see the forest through the trees, and they're feeling this incredible amount of volatility. And I think, one of the dangers is the fact that we've had 12 years of this unbelievable market. And, I talk about this story every once in a while about being desensitized to, strong performance. And I think we just have to remember it's been, 12 years, 13 years since we've seen a real downturn at this point. And I always talk about the story about when I learned to play craps for the first time ever. When I learned to play craps for the first time ever, I was out with, my partner here. We were in Vegas. He was teaching me all the ins and outs of this game that I have this love-hate relationship with. But the worst thing possible happened to me when I learned to play the first time. I won. And most people are very happy to win. The problem is, at the time, it was like 20 years ago, I had $1,000 in my pocket, and they were teaching me all of these complex moves, and I felt really smart because I was winning and winning and winning and winning. And my $1,000 turned into $10,000. And we were at Sam's down at this little place in Vegas there. It's, where they say all the locals like to play.
Okay.
And my $1,000 turned into $10,000. And there were a few beverages involved. And I remember saying, this isn't going to be Sam's town. This is going to be Stewart's town at the end of the night, And but what I realized, Cynthia, was, oh my gosh, my $10,000 is gone. I have to add more money, and I had to dig back in my pocket by the end of the night. And I think that what people are realizing is you got to know when to hold them and know when to fold them, right? Kenny Rogers was right
the
about
gambler,
that,
absolutely.
And sometimes it's time to walk away, sometimes it's time to run, right? And you need to know, when to cash in your chips. And, if I would have just cashed in at the top, right? I mean, how many people out there, were able to cash in right at the peak in 2000 or 2008 and didn't see any of the fall? Well, most people got hurt pretty badly. And after this amazing run, one of the longest bull markets in history, if you take out the COVID drop, it's essentially a continuation of the market. And a lot of that is because of this crazy amounts of stimulus that the government just keeps printing and printing and printing all these dollars. And so we really have this false economy here. So, I think we're closer to the end than we are the beginning. I'm not certain, but I certainly know that it's not worth taking that kind of risk with the entire pot.
Yeah, that makes sense, Stewart. Thank you so much. We also talked about taxes, obviously, being the most efficient window in history. Can we talk a little bit about taxes as well?
Yeah, so I think it's really important to understand where we are. And once again, a lot of people's perception of the tax policy, today and moving forward in the near future is that, only the wealthy benefited from the Trump tax cuts. And I have this slide that I think is very interesting to look at. It's our tax slide. And if you take a look at the blue in there was the 2017 pre-Trump tax rates when you start to look at standard deduction for married filing jointly. The red is after the Trump tax cuts. Now, a lot of people believe that the Trump tax cuts only benefited the wealthy, and it didn't. If you take a look all the way, there are more people paying no taxes at all or in that 10% bracket than ever existed before. The 22% used to be 25 to 28. The 24 used to be 28 to 33%. We're in this really efficient window right now, and we know, I think people sense that change is in the air.
Yeah.
Right? We know that there's some things that are changing. We don't know when it's going to happen, but we know it's going to happen, right? The administration now is very keen on raising taxes, and you always start with the easy people to raise taxes on, the ultra wealthy. Right? And remember, ultra wealthy is all what you define it as. I have clients that come into my office all the time with, $5-10 million and don't feel wealthy because they have friends that have more. Everybody wants to be rich. They just don't want to be considered rich when it comes to taxes, right? So I think it's really important to have some reality in terms of where you fall in that spectrum.
Sure, that makes sense. And then, Stewart, do you recommend things like Roth conversions for people with tax?
Well, yeah, absolutely. It's a great tool, but remember, once again, it's in jeopardy. So we don't know if we can do that, moving forward. I mean, at this time, it's too late to do any sort of conversions on this year. Most companies have kind of stopped, the conversions. But moving forward into next year, I mean, you just really want to make sure it's available as a tool.
Yeah. So I think when we take our next commercial break, Stewart, when we come back, I think we should talk about how to protect yourself during a downturn. What do you think?
I love it.
Okay. Well, Stewart, I know you have a very special offer to present to the viewers at home today. Let's talk a little bit about that and then reopen the phone lines.
Sounds awesome. So what we're offering the audience today is a complimentary portfolio review. If you've been able to put away money for retirement and you're concerned about the volatility and the inflation that we're seeing today, don't hesitate to give us a call. Give us a call at 833-652-7829, or you can click on the QR code that's on the screen here, or go to www.apsitaxes.com. However you decide to reach out, we'd be glad to help. We'd be glad to take a look, give you a second opinion. And I have a great friend that's a financial advisor based out of Pennsylvania, Brian Krawanta, and he always says you can't get a second opinion from the guy who gave you the first. So we'd be glad to give you that second opinion.
Stewart, thank you so very much. To the viewers at home, the phone number to call is on your screen. That number is 833-652-7829. We have to take a very short commercial break, but don't go anywhere. When we come back, I'm going to talk to Stewart a little bit more in detail about how to protect yourself if there is a downturn. Stay tuned.
This is the story of how you get from here to there. Right now, you're here, but in the future, you want to be there. And from here, there looks pretty good. But so few get to there. Why? Well, of those who do make it, some will have luck, but most will have a strategy. They will save and invest, grow and protect, and they will work with advisors who will help guide their way. If you're looking to get somewhere, to get there, we know how to set a course. It's what we do, and we do it well. We're investment specialists, retirement advisors, insurance experts, and financial planners. We have innovative wealth tracking tools to monitor your progress every step of the way. Wherever you are now, we can help you get to where you want to be. The road between here to there is shorter for those who know the way.
And welcome back to the Asset Preservation Hour. My name is Cynthia DeFazio, and I'm joined today by Stewart Willis. He is the founder of Asset Preservation Tax and Retirement Services. Stewart, a wonderful show that we're having today, and obviously going into the commercial break, we talked about protecting against a potential downturn, if you will. So what are some of the strategies that you're helping your clients utilize?
Well, I think it's first of all most important for people to know their options, to know what's available as choices. And we have a lot of clients that are that have big 401k plans. They come in and they feel completely helpless, but they need to know what choices they have available to them. One of the choices that a lot of people don't understand or don't realize is out there is once they turn 59 and a half, oftentimes they have the ability to roll their 401k into a professionally managed account outside of their 401k plan. People realize that, hey, they're not comfortable managing the market. They know they've been on this tremendous ride. But for some people, if they have a 401k and they're over 59 and a half and don't want to have to quit their job, because Cynthia, I'll tell you, I have clients all the time that say, I need to quit just so I can protect my 401k. And it's not necessary for most people, because if you're 59 and a half, you may have the ability to take that out and roll it over. Now, there is some downside to that, like loan provisions, ERISA protections, a few other things, but I think it's really important to make sure you deal with a fiduciary to determine or to help you determine whether or not it benefits you. I think it's really important. Number two, I think it's important to have diversification, most importantly. And I think most people realize that, diversification is to make sure that they don't have all their eggs in one basket. And what most people are talking about is a diversification of investments. Well, oftentimes we'll see portfolios that have 50 different holdings, and those 50 different holdings will all own the same stuff. So if all of your mutual funds are buying the same stock, are you really diversified or not? I don't know. That's a diversification of investments. And we can do a portfolio analysis to really let you know whether or not you're diversified in that way. Most importantly, in my opinion, is to also have a diversification of perspectives. And by perspective, Cynthia, what I mean is that a lot of people that deal with their financial advisor have this great advisor, and they're great people. And he's the guy or the gal that is picking the funds right in front of you there and saying, hey, you know what? I really like this fund. I see some good opportunity. And they're doing the best they can to provide advice to you. The problem is, does it really make sense, in your opinion, really think this one through, to rest all of your entire life savings, to bet all of that, to go all in based on how that one person sees the world, right? And I'm telling you, a diversification of perspectives is important too.
Sure. What
we do at Asset Preservation is we have multiple money managers. We have the biggest money manager in the world overseeing some of our portfolios. We have David Young, who's an amazing manager as well. We have an algorithm manager. And let me just kind of show you one example. So most people have, when it comes to diversification, they have an asset allocation map, and they have these very static models. So I'm going to pull up a screen here for you. If you take a look, this is what most portfolios look like. It's 60-40 bonds or 80-20, depending on their risk levels. But what we do at Asset Preservation is much different. These things are very easy right here to just, to buy and hold, and there's not much work to do for the advisor. But what we have is tactical and strategic portfolios. And I have a slide here for you. here, and what I want you to think through is that if we are in a recession, you have to believe that there are investments that do better than when we're in recession, and vice versa. Does it make sense, Cynthia, for the people to buy something as if it's a bull market when we really know it's coming to an end?
Yeah, that's
right?
true. Absolutely.
As the markets start changing, you have to make sure that you're adapting. And if your advisor isn't doing something there to make sure they're protecting your downside as this economy changes, look at your portfolio. What have you seen them do in exchange, in response to this crazy inflation? Has there been any sort of hedging, to take care of that? Maybe, maybe not. Take a look. I think it's really important to look at that. We also talk about, diversification of tax classes. It doesn't make sense to have all your money tax deferred. Why? Because you're creating this massive tax time bomb. And Cynthia, let me ask you a question.
Sure.
You're the one always asking questions. Let me ask you this.
Okay.
Do you think taxes are going up or are they going down?
Stuart, I'm going to have to say they're going to go up.
Yeah.
They have to, right?
Well, I mean, it seems that way under this administration. Right? Nobody's talking about dropping taxes, are they? Because someone's got to pay for all the stimulus, right? All the government spending. So we know taxes are going up. So does it really make sense to pay taxes or defer taxes to a time where the tax rates are going up? Maybe, maybe not. Everyone's situation is different. I think it's really important to just have a plan, to make sure that your advisor is looking at all sides of this argument.
Absolutely. Stuart, I have a question. If someone in the viewing audience today does not have a plan in place, what advice do you have for them?
Well, I think it's really important that you find an advisor that is willing to work with you. Because remember, I think, advisors, stockbrokers, etc., have done the least amount of work necessary to continue to get paid. And I see a lot of my, I'll call them colleagues in the industry, that are golfing 3 days a week. And I wish I had that life, but I'm spending so much time with my clients, doing real planning. I think it's important to have a plan. And the one thing we say to you, if you've done your job and put away the money, if you've put away $250,000, $500,000, $1 million plus away, and you're concerned, give us a call. It's important to have a plan. And if you don't feel like you have the right plan, we'd be glad to give you a second opinion.
Stuart, I know we only have a minute left of the show this week, but let's talk a little bit about the offer that you're going to be presenting to the viewers at home.
Yeah, so what we're offering the audience today is that complimentary portfolio review. So as you're enjoying the holidays there, you're also in the back of your mind knowing that you need to have a plan. Give yourself this gift this year, a complimentary portfolio review. That'll be our gift to you. All you have to do is take action, give us a call, 833-652-7829, or click on this QR code, go to apsitaxes.com. We'd be glad to help.
Stuart, thank you so much. To the viewers at home, thank you for spending time with us. That number to call is 833-652-7829. Remember, don't forget the St. Mary Food Bank. Be safe, be happy, be blessed. We look forward to seeing you back 1 week from today.